July 19th, 2024. Coming into today, you have to keep in mind that it is the last day of the week. And so on the last day of the week, you can generally look for weekly chart magnets. On the weekly chart this week, I didn't really think there was anything all that important since the bear bar, it was closing somewhere in here. So I suppose the bulls, their goal would have been to try to drive the market back up past last week's low and get a close above last week's low would be the goal for the bulls. And the bears just wanted it to close on its low. It was already down here. It was somewhere around here at the start of the day. So for the bears, they don't really care if it closes here or here. It's still a pretty strong bear close regardless. But either way, I think this is probably the end of the bull trend in this bull leg, and we're probably going to convert into a trading range. Coming into the day, something to keep in mind is that this is a spike. Yesterday, we got a spike, and then we ended up getting a pullback. And then the market transitioned into the start of a channel. Oftentimes, channels will last a lot longer than, just towards the end of the day. So if you get a reasonably big spike, something that's pretty major like this, then oftentimes you'll get a spike in channel trend. Channels in general can last 2 days or 200 bars if, it's not or just on the 5-minute chart, I meant to say. Usually expect them to last, if it's a long protracted channel like this, you can expect 2 days or 200 bars. You could say the channel started over here and it's still, somewhat intact. You could argue that we had a trend line break here, but we might be forming just a slightly less steep bear channel, but probably only 120, 130 bars. Do I think that we're going that much lower off of this? No, I think this is probably going to start to convert into a trading range. We got a couple of pretty strong looking reversals up today. So I'm not all that sure that there's that much left to the downside. Just get this how I want it. Oops. So bar one today was a doji bar. In general, whenever you get a doji bar on the open, you have to be expecting the day to be more of a trading range day. Doji bar in general is a trading range bar. And so you should be expecting that when you get that as bar one, odds are we're going to get some sort of trading range for at least a little while on the open. What are the magnets for the bulls? Well, the bulls want to get back up to at least this close. You can see we rallied up to that close and then sold off very sharply. Why? Because if you're a bull and you bought the close here and it's not really optional to be disappointed by this. Every bull who bought here is going to not be happy with how this bar closed. So those bulls are going to be pretty eager to get out of their longs around break even if they end with a scale in profit. If they did scale in up here, you could argue. I'm just going to test this out. Yeah, so it's interesting how price action works like this. You can argue that this is a spike, and then we get a two-legged correction. One, pullback, and then leg two. And if you look, the two legs are basically the same size within a tick. So if that makes sense, spike, and then, spike up, and then one, pull back, and then this is the second leg down. The gap in the tail on bar one is the second leg down for the bears. So what are the bears hoping for? They're hoping that what are the bulls hoping? The bulls are hoping to at least get back to that high close, but more likely they'd like trend resumption. So they're seeing this as a spike and a two-legged correction, and now they would like trend resumption to the upside. What do the bears want? They're hoping that the bulls are going to sell out of their longs if we get back up to this price and they can get some sort of double top bear flag and a potential high of the day, which is what ended up happening. Bar two, consecutive bull bars. So doji bar on one and bar two, a big bull bar closing near its high. Are we probably going higher? Yeah, we're probably going at least a little bit higher with, decent bull bar on the open. And, it was a doji bar, but it still was a bull doji. And this is pretty strong. So we are probably going at least a little bit higher. But I think this magnet is going to call into question, if the bulls have a lot of momentum today, or if this is just a vacuum test on the open. Remember, however strong something looks, you have to keep in mind that any 50-50 chance on the open. So no matter how strong, let's say the opening 5 bars are just 5 giant bear bars, no matter how strong it looks, 50-50 chance it's just a vacuum test of something. So relatively easy to say 50% chance of rather sharp reversal here. Bar 3, a bear bar closing near its low. Disappointing, obviously, if you had bought above 2. The problem with selling below 3 would be that it's a big bar and big risk, and you're right on the moving average, and there's a tail on the bottom. So none of those things make it all that ideal. However, we are in a bear channel. You can see from yesterday, we're still within the bear channel. And since we are in a bear channel, you could argue that you're selling relatively high in the bear channel. Additionally, it's a double top bear flag with, I'll just add this study. See, I don't know what I did there. Hold on. No. Um, all right. I don't know what I did. Hold on. Just let me pause the video real quick. Sorry about that. So, anyways, bears want to argue that it's a double top bear flag. Bar 77 and bar 3 would be the double top. When you get a double top bear flag in general, bears are hoping, or they know that there's probably about a 40% chance that you get a measured move down the height of the neckline. And if we are going to get a measured move down to here, probably 90% chance that that's the low of the day, or that we've seen the high of the day, right? So if this is to succeed, this double top bear flag is going to succeed. It's going to take a lot of bars to get there. And it's very unlikely that it's going to get all the way down here and then reverse up and we're going to get a new high. That would be a very low probability event. So I think you can sell below 3 and say, pretty confidently that there's a 40% chance that selling below 3 that you have seen the high of the day. But the problem with double top bear flags is that usually, this is a prime example of it, usually there's a lot of reversals within them. So there's a 40% chance that we get down to the measured move. However, usually it's very, very difficult to sit through that whole move down, even though you know that there's a 40% chance that you get there. So this might be a set it and walk away more type of trade. But it's definitely reasonable to sell below 3, saying 40% chance that we've seen the high, or that we've seen the high of the day, and just probably walk away for a little bit. Bar 4, kind of had follow through. I think bar 4, it's kind of expected. Bar 3 isn't all that large. So, or sorry, it's not all that great because the huge tail on the top and the tail on the bottom. So bar 4, not really all that good for the bears, but there's probably sellers above. 3 and 4 on their own are strong enough for a second leg sideways to down. So you know that there's probably going to be sellers above 4 for that second leg sideways to down. With that being said, bar 2 was a pretty strong bull bar, so we should get back to at least the close of bar 2. You can see on bar 5 as it rallied, we rallied back up to the bar 2 close, and then we sold off a little bit. So not that surprising, considering if you had bought above bar 2 and you sat through 3, that's a pretty disappointing close. And you can see bar 4, maybe bulls scaled in around the open of the day. And they used the rally on 5 to sell out of their longs around break even on their first entry with a small profit on their second one. Bar 6, bears might argue low 1 short in their bear trend from, basically bar 3 and from the double top bear flag. You could also argue it's just its own double top. Either way, low 1, double top, whatever you want to call it, it's on the moving average and it's a bull close. So it's not all that likely that we're going to get the big sell off from this point. To me, we're probably going to go a little bit more sideways to down, at least, initially. It is also, we're forming a triangle, right? We've been forming all sorts of triangles this week. Yesterday afternoon was yesterday morning was an expanding triangle with the prior day's afternoon. Then we got a breakout below the expanding triangle. I would imagine we got some sort of measured move down, maybe of the bodies. Yeah, somewhere in between there. But anyways, we have a triangle today, a normal triangle. So we're in breakout mode. The daily range is still pretty small. We're only at 22, 23, and the daily ranges have been rather large lately. So you can imagine the daily range is going to at least double. So bar 9, or was I on bar 9? No, bar 7, the bear bar closing near its low. It's good for the bears, but it's really not as good as it could be. They wanted a much bigger bar. This just seems like possibly 2 legs down. 3, 4, first leg, and then pull back 5, 6, and then second leg down on 7. So the bulls are hoping that we're going to get another breakout attempt, and that bar 2 was strong enough to get at least another reasonably strong breakout attempt, and we'll see if we get it. So bulls are hoping this is a 2-legged pullback from bar 2. Bears still thinking, still on the sell below 3, and just taking a chance with stop above here that we're going lower. 8, a bull bar, but a big tail on the top, so really not as good as it could be. I think if I'm a bear at this point, I'm not really, there's not really, sorry, I'm a little tired today. There's not very much to do for the bears, I don't think, after bar 8. I think if you shorted, you knew there's going to be a lot of reversals against you, so it doesn't make sense to get out. What about the bulls? Well, you triggered the high two buy above 7. It's not very good. Bulls would argue 4 is the high 1 and 7 is the high 2 because it triggered above during 8, but it's not a very good high 2 because it's a bear bar closing near its low. So it's probably better just to wait and to not do anything. 9, an outside down bar, a bear bar closing somewhat near its low. It's good for the bears. Are we always in short? That's a good question. I think at this point, you could make an argument on the close of 9 that we're always in short. You can make an argument that we're never, we definitely went always in long from 72 to 76, but it wasn't, we didn't make any higher lows would be my kind of point here. So, while we did, yes, go always in long, the context probably remained somewhat always in short, even though the bars went always in long for a little bit. So I still think the context is relatively always in short from the bear channel from yesterday, but it's pretty difficult and it could change at any moment. What are the Bears hoping, what are the Bulls hoping for? Well, they want some sort of higher low from this rally. They know this is pretty strong, and so they want to create some sort of higher low and get a reversal back up and get a new higher high and form the higher low as well. Bears want to break below here, forcing a lower low, and if they can force the lower low, then odds are the Bulls will have to get another pullback and a higher low before they can get anywhere. So the Bears want to get below yesterday's low, which is also, right around or just below the moving average. I was kind of surprised we got this big of a bear bar, as you can see here. Did we test this high? I do not think we did. We did not. We got pretty close though to this high and to the open of the month. You can see on the monthly chart, we're very near the open. So it'll be pretty interesting over the next week or two to see if we get a bear close on the monthly chart. I think we probably will get some sort of bear close on the monthly chart because the market is relatively overbought. Bar 11, or sorry, bar 10, an inside bar. It's an IOI pattern, an inside bar on 8 and then an outside bar on 9. So 8 is inside of 9 and then 10 is inside of 9 as well. So we have an IOI pattern, meaning it's a breakout mode pattern. When you have a breakout mode pattern, in general, in this area, it's relatively 50-50. It's not all that great for anybody. Again, it's a triangle. It's probably better to just wait to see what the breakout brings. When you get breakout mode, 50% chance that the first breakout ends up failing. So you get a breakout attempt on 11, probably a pretty 50-50 breakout. Bears hoping for big follow through and to get a breakout below here. Bulls want to see this fail and get a big reversal up. Instead, you get a big bear bar closing near its low on bar 12. Bar 12 also does something important in breaking below the bar 1 low, which triggers the sell below the neckline of the double top. And now some bears shorted here, maybe 60% chance we get the measure move down. So 12, bear bar closing near its low. They're hoping we get at least below yesterday's low. The problem with selling 12 is that you're selling very low, right? So you're selling near yesterday's low, which is going to be support. And you're also selling near the buy climax low from 72 to 76. So we have a buy climax and we're at the bottom of it, which is going to be a magnet in a trading range and going to be a support area. So you have to expect there's probably going to be buyers in here somewhere. So while you can sell the close, if you're going to do that, you probably have to find a way to sit through these pullbacks, which can be a pretty difficult thing to do. 13, disappointing follow through. So if you sold the close at 12, you're probably relatively disappointed in the doji bar on 13. If you sold down here, ideally you were looking to see a bar like 77 yesterday, just a giant bear bar closing near its low. And instead you got, a doji bar. So it's really not all that great. If I was a bear, I would have wanted a much bigger bar. So they're disappointed in how 13 closed and hence bears buy back shorts causing 14. If you notice, the high of 14 is 55.8125 and the low is 55.815 of bar 1. So there is a small gap between the 1 low and the 14 high here. If the bears can keep that gap open, it increases the chances of another bear trend day forming. If they cannot keep that gap open, it would decrease the chances of another bear trend day forming. Bar 15, a bear bar closing near its low. It triggers the low 1 short below 14, but it's not a very good short because this is a pretty big bull bar. This probably shouldn't happen if we're going to get a bear trend. This is a pretty large looking bull bar closing near its high. So, with all of the bullishness over here, I think that this is probably going to convert into some sort of trading range. I was expecting, especially after this, I was expecting some sort of swing up later in the day today. And we got one over here, but it was later than I was expecting. Where was I? Right. 15, so a big bear bar closing near its low, triggering the low one. We go right below Thursday's low, and that's where we find buyers. So reversal up 16, but a big tail on 16. Had 16 closed on a tie, it would be a credible buy, betting we've seen the low of the day. Instead, there was a big tail. So that's a problem for the bulls. They were hoping to get a good looking reversal up here, and it's really not all that good. 17, you can see there were sellers above 16 because bulls were not as interested in buying. And then inside bar 18, a low one short. But again, it's not a very good sell. We've had too much buying pressure, but it's not a very good buy because the bulls can't seem to get a good bull bar closing near its high. So this is one of those weird areas where if we can get a bar closing on its high, bulls are going to look to buy it. But it's until that time, bears might be looking to sell pullbacks. Again, it's a bear channel. So in a bear channel, you want to sell pullbacks to the moving average. You don't want to sell at new highs. Or sorry, you don't want to sell at new lows. New lows, like, the new low, the new low, the new low, the new low. Look at all the new lows basically. It ended up being mostly profit taking areas for most traders. So it's hard to be selling, closes down here and selling closes down here, and any of these difficult sells, any of this difficult because like you can obviously get a violent reversal up. 19, a big bull bar, but a tail on the top, overlaps with the one low. So the limit order bulls who bought below bar one, scaled in maybe 5-10 points lower. Maybe they bought scaled in at yesterday's low. They used the bounce to exit their short or exit their longs around the one low, and they made money. So limit order bulls making money decreases the bearishness. However, limit order bulls can still make money in a bear channel. Bears want to see a two, or they would, think of this more as a two-legged correction. So you could say 13 is the first leg and then a pullback. Or sorry, 14 is the first leg, a pullback on 15, and then a complex second leg up from 16 to 19. Other bears would look at 15 as the new low, since it was the new low, say that this is one, and then 18 is the pullback, and this is the second leg up. Either way, what's important to know is that it's a two-legged correction, regardless of how you see it. So it's a low too short, in my mind, below bar 20. The short actually triggers, excuse me. The short actually triggers below bar 19, but it's not worth selling below a bull bar. So if you're going to sell, you got to sell below bar 20. What's the problem with selling below 20? Well, one problem is that it triggered below 19. You didn't really want that to happen. What you're hoping for, ideally, is a small bar closing around or just above or just below the moving average in a bear channel. So when you're in a bear channel, you want to sell low twos at the moving average. When you're in a bull channel, you want to buy high twos at the moving average. That's what you want to be doing, and you want to be using the new lows to take profits. Like you can see here, traders, the new low, they took profits. The new low, they took profits. So you don't really want to be selling breakouts in a bear channel. 20, so the low too short triggers below 19, or you could just sell below 20. 21, consecutive bear bars closing near their lows. It's probably going to get a second leg sideways to down. Can you sell? Yeah, I mean, it's okay to be short in here, but the problem for me, like I said, is the new lows is where profit taking is happening. So if I'm selling below 20, I probably would have gone for 10 points. And you see, you're not able to make 10 points, and it's really hard to hold above 22. The reason is 12, 15, 21 is a bear channel. It's a wedge channel, right? So we have the spike and then the wedge channel, 1, 2, 3, and then a reversal up 22. So we might be getting two legs sideways to up. The only thing about 22 is that 22 is not able to close on its high. It's got the same problem that the bulls have been having all day, and they have not been able to get bull bars closing near their highs in the spots where they're getting credible reversals. So traders are again disappointed in that 22 is not able to close on its high, so they're not really willing to buy above it. And bears are using the opportunity to, scale into shorts higher here, but really near the moving average, bears are willing to sell, betting this bar does not close on its high, and you get a disappointing doji bar. The bulls are hoping that this is just a pullback and that we've started at least two legs sideways to up. So they're hoping there's going to be buyers below 23. And in fairness, there probably should be buyers below 23 since it's a doji bar. It's not the best sell, but it is always in short. So it's kind of difficult. Did we ever go always in long today? I don't know. We probably briefly were always in long in here. Thought, 29, 28, 29, especially 29 made the market always in long, but only for a minute. And then you have to exit. And then we're back to always in short. Remained always in short through here. And then, Contextually, always in long 64, but actually probably always in long 65, 66, and then probably back to always in short somewhere in here. So we probably went always in long briefly a couple of times today, but it was never all that strong. 24, a big bear bar closing near its low. It's a breakout attempt below a wedge channel. In general, when you're getting a breakout below a channel, there's only about a 25% chance of success. I think it's probably a bit higher here, maybe like 35 to 40% chance of success. But the problem with selling below 24 is that you're going to end up getting your risk is large, right? So you know as a fact, selling below 24 is not going to be a high probability trade. Yeah, it's a big bear bar, but look what the bears keep doing at new lows. They keep taking profits. So what do you think is going to happen on the biggest, most climactic bar breaking far below the channel? They're probably going to use it to take profits. So I don't know, probably 60 to 70% chance that you're going to get a reversal up within 5 bars. The statistic, in the books, in the course, whatever, is that 75% chance that you're going to get a reversal within 5 bars of the breakout of a channel. However, this is a reasonably tight channel, so I thought the odds were maybe a little bit better for the Bears, but I still don't think it was all that great of an idea. Additionally, it's a bigger wedge with yesterday, bar 34, bar 69, bar 24. So it's a bigger three pushes, which also made it a bit difficult to want to sell down here. Disappointing follow through 25. I think if you sold 24 and you get 25, I would probably just get out of the trade. That is not the follow through you were hoping for, and it's only going to get worse. Traders are only just going to continue to give up. So if you sell 24, you're hoping you get a big collapse in another bar looking like 24, and you get a quick maybe 10 to 15 points, and you just take your profit. Instead, you get a disappointing follow through bar on 25. So most traders are probably going to start taking profits pretty soon. Again, something to keep in mind is that yes, this is a bear trend, and it's a bear channel, but bear channels are bear trends. But we're getting reasonably credible looking reversals up. They're not good because the bulls haven't been able to get the bull bars closing near their highs. So the bulls are definitely not doing what they need to do. And one of the reasons why, by the way, 20 made a little bit more sense was because the bulls were not able to get a close above the moving average in here. Had let's say 19 closed above the moving average and then 20 happened, well, the trade's not quite as good anymore. So it's better when the reversals, aren't quite able to get above the moving average if you're going to sell a big bar. It's more okay if the reversal gets above the moving average if you get to sell a small bar like over here. So the risk reward, again, you have higher probability here because it's such a big, you have higher probability here, I think, because we weren't able to get above the moving average, but the bar is big, so it's not as great with the risk reward. Versus over here, this might be one of those situations where they're both kind of like 50% trades, since it's more of a trading range, but it was still a bear channel, so it still slight edge for the bears. I know I probably wandered away from my point pretty quickly there, but anyways, 26, an inside bar. It's possibly a final flag. What do the bears see? Well, the bears are hoping that 24 is a new breakout, 25 is a pullback, and 26 is a low one short for the bears. And that's true. 26 is a low one short for the bears since it's an inside bar, and inside bars are low one shorts. But it's really just not as good as it could be. I think there's probably going to be buyers pretty soon here. We're really, really far from the moving average, and this looks really climactic. So it's probably not worth doing anything. That's why you can see you get disappointment in buyers below. And that's why you get the bull doji bar on 27. Bears, they see 27, and that's pretty much all it took for them is one bull close and bears exit the trade. That causes bar 28, which also not quite able to close on its high, but a reasonable buy above. You're buying pretty far away from the moving average. And we're probably getting back to the bar 23 low. So I think you can take the buy and just probably look for 10 points. Or what some traders will do is they'll wait for follow through, like bar 29. So when they get 29, they see that they're getting basically the same entry price that they would have if they had bought above 28. And some of them will just place a limit order where the bulls who bought above 28 got filled, which is just at the bar 29 high. And you can see those traders got filled as well. So a whole host of bulls buying here causes the huge bull bar closing near its high 30. And you're able to make, had you bought above 30, you were able to make 10 points during bar 31. And that's probably why there was profit taking there. Now, if you're looking at bar 30 and you're wondering why we didn't race up after bar 30, it's because the risk has gotten huge and you're no longer buying in the lower third. One of the reasons 29 and 30 are really solid trades is because you're buying well in the lower third over here. You can just try and basically get a rally up to the midpoint and make a pretty good amount of money. But now on bar 30, the midpoint is only 5 points away, and you'd have to put a stop, 15 to 20 points away. So it's pretty hard to do that. And this is big risk, and this is a very good example of big risk in a trading range and why big risk in trading ranges doesn't work. It's the same thing kind of concept over here. Kind of the same concept with this bar, to be honest, 35, which is why 36 was not another big bear bar, is because traders could see that the risk was really large. So 31, a possible bull trap. Bears want this to be a bull trap, and they want trend resumption down, but this is strong enough that we're probably going to get a second leg sideways stop. I assumed at this point we were probably mostly done going down. I thought we went down further than we probably would, to be honest, after how strong this bounce was. Thought we might try and form some sort of higher low, or maybe even a lower low, and then try to get some sort of reversal up. Outside up bar on 32. It's not really worth buying. It triggers below 30, 31, and possibly traps the bears out who shorted it by trading above it. But it's not able to close above it, so it's really not all that good. It's a high one buy for the bulls above 31, but you don't want to buy above the bear bar in the middle of a trading range. 33, another inside bar, so it's an IOI pattern, same as 8, 9, 10, and so theoretically we're in breakout mode. The problem is we're towards the middle of the trading range, so if you're looking for something in here, the probabilities are not all that good, and the way you want to offset bad probability is with good risk reward. And so if you're selling, or if you're it's hard to want to buy because the bull bar, there was no bull bar on 33. But had it been a bull bar, you're looking for, again, small risk, like it would have been on 33 had it closed on its high. Still not a great buy, even if it had, because we're getting lower highs and lower lows, but just kind of the example I'm trying to make. And this, which is segueing into the point in that we get bar 34, a bear bar closing near its low. I think it's also important that 34 traded above 33 and did trigger the quote unquote buy signal bar. It's a theoretical buy signal bar because it's a breakout mode pattern. So there end up being sellers above 33 because bulls don't want to buy above a doji bar. We get a reversal down. So in general, 50-50 breakout chance that the first breakout is going to fail. So you can make an argument that 34 is a 50-50 trade. The channel up is pretty tight. It might be more like, I want to say it's 40%. But it's a bear channel or a trading range. And either one of those, the 40% trade are the ones that tend to work and work more like 50% of the time. So it's probably not unreasonable to think that bar 34 is a 50% trade. What do I mean by a 50% trade? 50% chance of making, at least twice your risk. So I don't know, 50-50 chance maybe that we get somewhere down here. And if you look, the buy climax low is obviously a target, but the bears who sold above bar 27, it's not really good to buy above bar 27, a bear bar close or a bull bar, but just such a huge tail on the top. We have this little open gap right here. So we might have to get back to the bar 27 high. And you can see the probability was reasonable because there was such a huge bar on 35. But once you get 35, yes, consecutive bear bars, always in short, probably going a little bit lower. But why 36? Because now the risk reward is not all that good. And the probability in a trading range is never quite as good as you want it to be. So now that the risk reward is not all that good, traders are using this bar more as a profit taking bar, scalping out with, I don't know, I don't think they quite made 10 points, but sometimes traders don't care. They were able to make a little less than 10 points, 1 or 2 ticks less. And sometimes traders just take that when you're in a trading range. And that's why you got some buying back of shorts on bar 36. Bar 37, a bear bar closing near its low. Could be a second leg down. I don't really want to sell down here, to be honest. I don't think it's worth selling anything down here. I think the sell was 34, and if you missed it, that's fine. Just leave this alone. 37, a bear bar closing near its low, but you just triggered a low one short below 36. So you're selling the entry bar to a bull bar that is a low one short towards the bottom, middle lower part of a bear channel. And you know that the buy climax low is going to find buyers below. So it's really not all that ideal. 38, follow through for the bears, getting to a new low. What do the bulls want? Well, it was reasonable to say that we had some sort of bear channel line here and we broke it here. And so bulls want some sort of lower low major trend reversal. This is pretty strong, so we should get a reversal up. I'd imagine probably trying to test back into this area since it was reasonable to buy up here. You can see we only got back up into this area, and I think the reason we only got back up to here, and the 36 low was a magnet too, because the bulls who bought below bar 36, they faded a low one towards the bottom of a trading range. They should be able to scale in and make money. So the 36 low was a pretty reasonable profit target. especially buying above the higher low double bottom on 64. So you could take the buy, risking, maybe 7 points, and you're trying to make a little over 14 points. So you have 2-to-1 risk reward, and the probability doesn't look all that great because of all the bear bars, but it is a high two we triggered above here. And in trading ranges, the probabilities never look all that great. So it's reasonable to say that, probably 50-50 chance buying above here, you're going to get here. I just want to see how close to the middle you were buying if you bought. So still reasonably in the lower third, but you can make an argument this isn't the trading range, the bigger piece of the trading range, but it's still important that this is able to close a little bit lower. Some traders might argue the bottom was here, since we got that reversal up from the reversal up was from the 63 low. So they might argue that it's the trading range instead of from this low. And if you do that, then that would be the lower third. But either way, you're buying relatively close to the lower third of the smallest possible trading range. So reasonable to think we're going to get back to the bad low one short in the likely trading range. So 38, it's a lower low. Bulls want a major trend reversal of some kind, and the bears probably expecting sellers above. You can see there were sellers above 39 and a bear bar closing near its low. Another low one short, but mostly a doji bar, not worth doing anything. 40, disappointing. Again, we're going sideways here. Just a doji bar. At this point, I'm probably all done selling. I'm taking profits if I'm a bear. Again, the new lows, traders are taking profits. So I'm taking profits in here, and I'm looking to buy a reversal up. 41, another doji bar. So disappointing. We're getting consecutive doji bars. We have a lot of straight bear closes, and there's a lot of bear closes in the past 10 bars, but it's really not all that great. 42, sellers above the doji bar, 41. And you can see, again, this is a tight trading range from 39 to 42. You could argue 38 to 42. Tight trading ranges are usually final flags. So even if we get a breakout below, we're probably coming back to this area. 43, a bear bar closing relatively near its low, but we're probably getting back into this area. This is a final flag, and I don't think anyone selling below 42 should make money. Therefore, the traders buying below 42 should be able to scale in and not lose money. 44, a reversal up, maybe some sort of parabolic wedge. Kind of hard to look to buy above it, but some traders would if it triggered, betting we at least get a bounce back to the most recent sell climax high, the 42 high. And instead, bears are able to make the market sell off and not trigger the buy above 44. So you get disappointment 45. Another bear bar 46, but tail on the top, tail on the bottom, not as good as it could be. 47, at this point, I do think we're getting a reversal up. 47, a possible wedge. 35, 38, 47. I don't buy above bear bars, but this is probably the correct context to buy above bear bar. Again, I wouldn't do it. It's not smart to start trying to learn how to buy above bear bars in general, but this is probably the correct context to buy above bear bar when we're very overdue for a reversal. The bulls aren't quite getting it done, but we're still pretty far below the moving average. 48, a bull bar, but a tail on the top. Bulls are looking for something to buy, and you can sense the frustration for the bulls that they're looking for some sort of reasonable buy, but it just never quite comes. So 48, reversal up above 47, but a tail, so not quite as good as it could be. And then doji follow through 49. 50, again, a disappointing bar. There's buyers below 50 because this is a really bad low one short. It's a reasonably good bull bar. But it's a problem that the bulls are buying below bars this early in what they're hoping is going to be a bull trend. When you get the move early in the potential bull trend, usually, you're going to get a bounce. And you see a good bounce here. Traders are buying high, they're buying the market. Traders buying above bars, they're buying the market. Why are they already getting to buy below a bar on 50? That's not really a great sign for the bulls. So, but either way, though, traders buying below 50 makes sense, and you get a reversal up attempt on 51. So 51, double bottom, maybe 47, 51, neckline 50, but not that good, obviously, of a buy above 51. Hence why when we get the big bull bar, it has a tail on the top. The bulls see that. We're closing above the moving average, which is good. And we are also testing the 43 high, the most recent sell climax high, but I don't really see a reason to buy up here. This is more of a profit taking area, which is exactly what traders do, and that causes 53. 53 is a low two short for the bears. Maybe you can sell it, taking a chance we get down to the open of the month, which is somewhere in here. But you can see it never ends up triggering, and we get another bull bar closing near its high 54. Do you buy 54? Well, it might be a wedge. 1, 2, 3. We are probably always in long, but again, it's disappointing for the bulls that they're not quite getting the reversal that they were hoping for. seem to be getting more of a sideways to up move when they were hoping for a pretty dramatic reversal, something like this. 55, the bear bar closing near its low. It's a low 3 for the bears. It's a reasonably tight channel up. We're probably going to get back, at least a little bit lower. So you could sell 55 with a wide stop. Maybe you sell 55, you put a stop and measured move up here, and you just look to get something back down into this general area. Disappointment in 56, outside up, but a big tail on the top. Really not what traders were hoping for. And then 57, so it's an IOI pattern to 57. And you can see after 57, we get a failed breakout above the IOI and a reversal down 58. Am I selling below 58? You probably can. We're relatively high in the range. We're probably going to get at least, we're near the bear channel line is what I should say. We're near the bear channel line, so you can probably sell, hoping to get back down towards the bottom of it. And you get a big bear bar closing near its low, 59. Followed through 60, but a big tail on the top, so not quite as good as it could be. The doji bar 61, a high one for the bulls, but not very good. You can see outside down 62, but we're getting near the bottom of the trading range. So 62, 63, theoretically sell to close bars, but you don't want to be selling sell to close bars low in trading ranges. You want to be taking, reversals down on low twos from the moving average on days like today. Selling bear bars low in the trading range is not what you want to be doing, or low in the bear channel. You got to keep in mind, if we break out to the downside, there's going to be buyers because traders have been buying the lows and making money all day. Reversal up 64, bull bar closing near its high. Yes, 57 to 63 was all bear closes, but they're not that strong. Double bottom, higher low double bottom with 47, and we're probably going to get some sort of bounce. I'm looking at the 36 low as a reasonable magnet. 65 follow through for the bulls, 66 follow through for the bulls, tails on the top of both of them, and then a very climactic bull bar 67. 3 straight by the close bars 64, 65, 66. So when bulls see 66, they'll just buy the close, knowing that if we go below 66, we're going to bounce. So they'll buy the close of 66, knowing that they can either scale in lower or it's going to get some sort of bounce and they can just exit. 67 is not a buy the close bar. That is a get out. You should get out. You got back to the 36 close. You got what the bulls wanted. You're kind of entering the area where the bear channel line is. So I don't really want to do anything up here other than exit. This is a climactic bar in a trading range. It makes more sense to get out. 68, an inside bar, a bear bar closing near its low, possibly a bull trap. But again, what I'm seeing here is bulls taking profits. 69, sellers above 68. It's a bad high one. Buyers below 69, since it's a bad double top short with 67. And then outside up 71. And if you didn't take profits over here, you just get out below 71. The low 2 short for the bears. So low 1, 69, low 2, 71. But it's really, again, it's not all that. It's potentially, we're transitioning into a broader bear channel. Yeah, but I would probably just let it go. You can take it for sure. Small bar, so small risk. Maybe you get something to the downside. Those are the kind of trades that work on days like these channel days. And then you end up getting the sell off. For stop orders, I thought you could take 3 and just hope it's the high of the day. I try to highlight that trade every day. The kind of trade where you could take it and hope it's the high or the low of the day. Because I think it's an important thing to possibly highlight and maybe, show where the always in direction is going. I don't know. Maybe you could sell 11, betting IOI breakout below, and we've seen the high of the day at this point. So bear bar got to get short, but I'd probably rather wait for something better. Like 20 is fine. I thought 28, 29 by the close bars, looking for maybe, it's more of a scalp trade though. You want to make 10, 12 points, probably just 10 points and just get out. So disappointment 33, failed breakout above an IOI and a bear. We're on the bear channel line, and this has been a day where we're getting lower highs and lower lows. So you can sell, hoping we're going to get a new low, even though it is a pretty tight channel up. I kind of want to say lower probability short, but the lower probability shorts tend to work because they tend to be higher probability in trading ranges and bear channels and bull channels, but it would be the opposite. Besides that, I would not personally sell any of this. You could probably sell, again, 55 with a wide stop and scale in more above 55. And you could probably sell here and here. Bears are going to exit 64. Bulls can buy 64. You get the big reversal up. And then do you sell? Maybe you could, but I'm not personally going to. On the daily chart, you can see when we had this tight trading range. Well, first off, a couple things that I mentioned. When we had the tight trading range, I mentioned I thought we would get back to it because this looks like a final flag to me. So it seems like it is the final flag, and we're getting back into it. So I don't think we're going to just keep rocketing down. I think that well, rocketing down doesn't make sense. You get the point. I don't think we're going to keep selling off here. I think that this is probably the target. So I don't think we get another big bear bar on Monday. I think it starts to go sideways. And as I mentioned, when you get this bull bar and then the gap and then the bear bar closing near its low, you might start to get some sort of swing. And bears have accomplished a lot the past couple of days. So this is going to get a second leg sideways to down. We might be always in short. The bears might need one more bar to make the market always in short. I would say they probably need one more bar, which is why they probably won't get it, and we'll probably start to go sideways here. In general, whenever one side needs one more bar, they won't usually get it. And we've had a lot of bars above the moving average. The weekly chart. So something interesting on the weekly chart, bear bar closing near its low, probably the end of this rally. And it was reasonable. These were such big, strong bear bars. They should have been the start of the trading range. So I think most likely we're probably going to come back to the midpoint of around the 5,000 big round number. And, this the bottom of this bear bar. So the midpoint will probably be important. So we might have to get back to this general area, or at least the moving average. Is it possible this was the start of the trading range and this is your one more leg up and we'll come all the way back down here? Yeah, it's possible. I'm not sure how likely it is. The Bulls did a really good job, but I wouldn't be super surprised if we got back into this area. But again, this is the end of the buying. I would be very surprised if we did basically this again and then just got another big bounce. And yeah, the monthly chart, I think a week or two of, a little over a week left of trading, like a week and a half of trading days left in the monthly chart. So pay a lot of attention to see where this ends up closing. The bears would really like a bear bar, and I think they're probably going to get it. All right, that's the day.